A lot of times what my clients fail to realize is that the S-corp election requires them to pay a reasonable wage based on the total net income of that business. So while the S-corp isn't inherently bad, the problem is people are using that as their main tax strategy on their main business, their main operating company. And that's the biggest flaw. What most of my clients end up doing is they pair an S-corp with another entity. And so they'll have the main operating entity, usually a standard LLC, and it will have some sort of leasing arrangement with the S-corp. Now, let's say there's $1 million in net profit in the main operating company. What we'll then do is we'll lease some sort of intellectual property IP or tangible goods to the other entity for a low figure that the client wants as a reasonable wage. So out of this example, let's say it's $100,000 of the million. Well, what we'll do is we'll contract that $100,000 in a lease to the other S-corp. Why did we do that? Because now the S-corp reasonable wage requirement is based off of the 100,000, not the million. Now you're probably thinking, what do we do with the other $900,000? And that's where we drive it up into the structure. Usually the dynasty trust is the final entity that receives the money, and then we'll purchase assets, collateralize it, and use that tax-free money. So there's a lot of different structures here, but most people, they're using the S-corp election completely wrong, and they're using it as their main huckleberry. It is not meant to be the main huckleberry. Stop using it that way. Comment S-corp down below if you're doing that strategy for yourself.